Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping back down into the charts for Bitcoin to talk about whether or not we think Bitcoin has the potential to drop down to $25,000 or maybe even lower. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done out of the way, let's jump on down into this, right? So we're on Bitcoin paired up with USDT. This is just the daily chart. We are tracking this kind of impulsive, or no, call it impulsive actually, because it's not impulsive. It's actually a five-wave structure going down, right? It's actually full of corrective moves inside it, such as 535s and 335s and things like that. But it's not actually an impulsive structure. It's not a 53535 structure and taking us down lower. Okay, so when you really analyze the micro movements, they're all very, very corrective. It's more something along the lines of a 333 corrective strung together, and inside of that you have all of those individual micro movements. Now, taking a look at this, we do have the potential to be, moving on up to around the 42,000 level, then pulling back down towards the 37.5 to $38,000, right? And that's the five-wave structure. Now, obviously, with that five-wave structure, the things that we should be expecting would be a three-wave up afterwards and then an additional five waves down. This is because it's corrective in its structure, and a corrective pattern of a 3-5-3 should be expected, okay? So essentially what you end up with is some ABC upwards, and then you end up with that five-wave structure coming back down, okay? Taking us down lower. Now, I'm going to talk a little bit around that in this video, specifically with how low I think this thing could potentially go, what would happen and what would be required to invalidate this particular structure, and where I think Bitcoin's actually going, right, slightly longer term, right, rather than just all these micro movements. So essentially, we currently have a 335 structure appearing here for Bitcoin, right? And this five-wave structure could be invalidated on the next bounce upwards, right? So the invalidation of this five-wave structure, we should start there, comes in at 44,200, right? And I've marked it up with this dashed line just across here. If we go higher than that with this fourth wave, which I do think is highly probable, that essentially what you're going to do is invalidate that move to the downside in that bigger structure, at least inside this structure here of five waves anyway. Okay, and as a result of that, you actually have this as an ABC. We end up with an ABC up taking us higher than 44,200, and then you end up with another set of corrections bringing us back down, and that should land us in around the $37,500. This is something I've been talking about for quite some time, way before we even hit the high points. I was talking about us moving up to 47.5k and then moving down to about 37.5k, or 37,500. Okay, so essentially what you have here is a big ABC move upwards, right? A big correction going up here, right? Full of corrective plays as well. It wasn't a triangle, it wasn't any of that stuff. We could see all of that way ahead of time. And there was obviously lots of things causing different kind of pullbacks, whether it's this pullback here or this pullback here, lots of different things that were going on at the time. But ultimately, the psychology of the traders will always tend to follow what is going on here. Now, essentially what you have is this $47,500 target that we had. We hit 48,000, and then we start to see a pullback down, okay? We were looking for a structure upwards within here, which was five waves, but again it was a 335 correction, so again not quite what we wanted to see, but basically you had 3 and then 5. We were hoping to actually go ahead and hit 50k. It didn't happen, so that was invalidated and we pulled back down. Now obviously we have these five waves on this daily chart moving downward direction. It's not impulsive, it is not a 5-3-5-3-5 structure. Instead it is simply a 3-3-5 structure, okay, and it's taking the appearance of five waves, even though wave 4 and 5 haven't played out just yet. So we should be aware that it's possible that this plays out exactly like this. And instead, you've got a 333 correction going on here, or essentially something similar to that, and ultimately, we end up with five waves coming down. Now, if we, on this data chart, do have all of those corrections play out inside these waves, and we do end up with five waves coming down, it would mean that it's a 5-3-5 wave count, okay, and what that would mean is that we end up with 3 waves that come up and then 5 more waves that would go down, and obviously with that it's still a big ABC, if you will, because inside or above this 5 wave, it has to be considered an A wave, which means you'd have a B wave bounce and then a pull back down into a C wave. Now, that's kind of how you would go ahead and look at it and measure it and all that kind of good stuff. It's basically just an ABC, but it's masquerading as 5 waves, right? That's kind of how you look at it. Now, essentially, what we have is all of these corrections. They're all being strung together, and we have got this trend line to the upside. Now, the $37,500 low target, which is currently being set by the estimated 4th wave typical movements and the typical movements of a 5th wave plotted out here, would bring us very, very close to our trend line, tapping this once again, setting another higher low. Okay, so basically we set the original low points. This was, I think, just about 32,900, where are we? Let me just check. Yeah, $32,917, right? We set that low point, we bounced up, and then a lot of people were thinking, that's it, it's just a bounce. We're going all the way down to like 20K. This is something that was happening and speaking about, way back in May of 2021, right? People were thinking that we're going down to $20,000 because there's a gap there that was left, and traditional finance people always want to fill those gaps, right? But essentially what you see is a higher low gets set right here, okay? We're higher low, we bounced up again. And then it was set at this lower high just here. That's it. We're in a triangle, it's a wedge pattern, we're going down to 25K, right? That was kind of the narrative. You pull down, what do you end up? You set this higher low again, and you go up and set this higher high, right? And now, of course, you've got some of those bears turn bullish. Again, could be a bit of a bull trap, however you kind of want to label it. Essentially, what's actually gone on here is you've got a big ABC, right? This was always going to be the point of reversal. And not only was it an area of consolidation on this side, it was also an area that was actually going to resonate with a 1-to-1 ratio with our A wave, right? So big A wave up, big B wave down, and a C wave coming up, right? Also consolidation over on the left-hand side was going to be resistance, was going to be the point of reversal. So for the most part, we've been saying on the channel, Bitcoin moving up to $47,000. $47,500, pretty much since somewhere around here, I think we're pretty much saying, yeah, that seems to be the most probable area that we're going for, and we'll move on up. Then we'll look for reversal. Okay, now what about the bigger structure? Well, the bigger structure is an interesting one because it does actually take shape of many different things. Essentially, we have these high points up in where was that? April, yeah, April 2021. We pulled all the way down to $28,000 Bitcoin, right? And for the most part, this is going to be at an extreme level of support, right? If Bitcoin was to go down to 28K, that's going to be really hard to break through it. But this here is the gap that people want to fill from traditional finance. Basically, we moved all the way through it and we didn't fill it, right? We didn't come back and test that area. So a lot of people want to see that one filled up. Now, the problem that I have with this essentially is that if we were to come down that low, basically you're triggering a bear market, right? And a lot of people will say, well, we've always been in a bear market. And I would disagree because you don't set new all-time highs in a bear market, right? Bear markets, they just go down, and basically you have patterns that are indicating that you're dropping down significantly. In fact, I've been through this multiple times, specifically in the Discord server, where that just simply is not the case. We don't have the right structure for that. We have very, very different corrective structures that are short-term, not long-term. But essentially, what we actually have here, in my opinion, is a running flat correction, right? Again, we have the corrections playing out over here. Why we saw this as a key reversal point, why we did not buy the A wave, why we bought the B wave, why we sold the C wave, all of those things we were speaking about months ago. So just check the channel out if you want to really dig into that. But essentially, what you have here is the corrections of running flat. Now, it's possible that it's an expanding flat, okay, and we come down to maybe 25K, but I don't think it's probable, and there's a few reasons for this. One, we've moved up significantly now, significantly higher than the original low points that were over here. Okay, so you just have to make it a very, very complicated correction if we wanted to see it go down into those low levels. Now, it's possible, but I don't think it's probable. Okay, those are two very different things. Something that is possible and something that is probable are two different things, and we have to understand that. A lot of people might be thinking that this is a giant A wave coming down here, this is a giant B wave, and then we move down into a giant C wave. Now, if that was the case, it's a possibility, of course. You can't ignore everything there. You can't just kind of make things up as you kind of go along. This would take us down to about $23,000. It is still a possibility. The only way to kind of prove that this isn't a possibility is to essentially go up and set a new all-time high. It's the only way to kind of disprove it. And again, if you drop down lower than 28K, it doesn't necessarily mean that this is a correct wave count, but it does mean that I guess it could be construed as a correct wave count, because the minimum requirements for a C wave is just to come down to exactly the same level that we were at previously, right? So that would actually technically complete that C wave just with a double bottom. Again, coming down to any of these low areas, just going down lower than the A wave would technically meet its requirement. But the most common would be a 1-to-1 ratio, which would show us at about 23k. It's possible, I just don't think it's probable. And the reason that I don't think it is probable is we've got to think about the correction and the momentum of the price that sits behind it, right? So if I bring the stochastic RSI back up here, on this daily chart, we are oversold. Heavily so, right? And the last time we were oversold, we were down here in this B wave low, and we rode up from those low levels of $34,000 to $48,000. Okay, oversold to overbought. So first of all, if we want to think about moving down, we have to first bounce up, and I've spoken about this a lot. Essentially, we need to move up before we can move down. And this is something that I think we kind of all know this, right? We're looking for a bounce on Bitcoin. We've pulled back down quite a lot. We can see the 335 correction. We're looking for the bounce. If it goes higher than 44,200, we know there's not a 5-wave structure going down. It's just a corrective structure going down. And that is taking the shape of a 335. Now, so we're looking for an upward move here on the momentum side of things. Now, how high does that momentum go? Does it go impulsive? Do we go higher than $48,000? At what point do we say, you know, actually maybe 25k isn't going to happen? Maybe, you know, this was our low point. Maybe that was a simple A, B, C right there. And now we're actually, you know, moving on out here. Maybe there is no complex correction going on. Maybe we're actually starting to see an impulsive structure form here on a slightly larger time frame. So it's interesting, right? Obviously, one can't be proven without first of all going either down below the low or going up higher than the all-time high, right? Those are the two options to invalidate that kind of structure. So, you know, we're kind of in a flux of unknown with that, right? No one's going to know for sure which way you're going to go. You know, you're looking at all these different ways on different timelines and all that kind of stuff. Essentially, it is possible to go down in towards that $23,000 range. I just don't think it is probable based on momentum. Specifically of how the markets are behaving, the corrective patterns that are appearing, and how the investors are behaving. Because there's a lot of data that sits outside of all of this as well. We've seen over 2 million, okay, over 2.1 million Bitcoin has left exchanges this year more than has gone on to exchanges, right? So 2 million more left than went on to exchanges. That is over 10% of Bitcoin's supply. Okay, so over 10% of Bitcoin's supply this year, 2022, left exchanges more than went on exchanges. There is a huge amount of adoption going on. I say adoption, I mean accumulation going on for Bitcoin, right? I speak about this all the time. So to think that Bitcoin's price is going down to 23k is highly unlikely, just based on the momentum of the price action, how the behavior of retail investors or investors are generally behaving in the markets. We're oversold on the daily chart. We need to move up first, right? The significant amount of accumulation that's been going on with Bitcoin leaving the exchanges is highly unlikely, in my opinion, that we drop down to those low levels. It's possible that we drop down to 37. It's possible even to maybe drop down to 38. To $34,000. Maybe even pushing down to create a double bottom at 32 is possible. Okay, but dropping down into the low 20s, I just cannot see it under the current data that is available to me. And I am data driven. I know I'm wrong. I would love to see a bear market, because I do think a 20k Bitcoin or 25k Bitcoin creates a bear market, right? It basically means that this $29,000 Bitcoin up here is your all-time high, because the second that you start talking about dropping down into these ranges, you are talking about about 65% drop, right? Now, if I bring up my other chart here, and I bring this onto our weekly chart and bring this back down, what do we see? Well, the all-time high, okay, was hit in 2013, and then the bear market had a 67% crash, with a total damage was 86% by the time it hit the low. It's 413 days. The 2017 all-time high, 69% crash, right? And was an 84% bear market low, 364 days. So far, we've seen a 56% crash and a 51% crash. If we were to drop down into the 20s, you're talking about moving the price into the territory of this, the bear market situations. And, you know, I mean, obviously we had that one little there. That was a bit of a black swan event. But essentially, if you do see that coming in here, and you pull that down, I mean, all kind of cards are off the table at that point. There is no more bull run. And the other thing that's got to bear in mind here, there is, if this is the case and Bitcoin is to go down into those levels and it does bring in a bear market, you know, we'll be talking about moving up into bull runs again and new all-time highs and all that kind of good stuff. But essentially, there's no alt season, right? And altcoins never decouple from Bitcoin. It's possible, but it's never happened in the past either. And so I think there's a lot of things we have to consider, lots of things that we have to think about, and things that I think are very important that we actually take data-driven approaches to, rather than just taking a look and saying, look, there's a gap at 20k, there's a gap at 25k or whatever. We have to go back down there. We have to fill that, and being super bearish without actually taking a look at the evidence to back it up. Because right now it doesn't actually look like there's a bear scenario here that takes us really any lower than the lows that we've already had. Okay, so for me to go down lower, I just don't think it's possible. And if we do go down that low, I think kind of all cards are off the table in your bear market at that point. And I really do think that you know, that is just not something that is probable, considering the amount of accumulation that's going on with Bitcoin, considering the price momentum behind every movement so far within this last couple of months, and you know, to consider how the sentiment is at the moment, right? We are seeing a decrease in volume as the price pulls back on the daily chart. We're not seeing the increase in volume on the daily chart as the price pulls back down. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all of that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.